Hi there, traders. This is Brad Gilbert with today's trading action. Now, the dollar rebounds as yields rise. Consumer confidence improves, right? Just another batch of US numbers that came out a little bit stronger than expected. Consumer confidence 102, above the expectations and much higher than the prior numbers. So the market took a lot out of that. The yields on the treasuries, if I can just come back to that page, right over here, did go up, right? So that puts upward pressure on the dollar, and we did see the dollar bounce accordingly, right? Across the major currency pairs, the dollar was looking a little bit sort of shabby chic, if you want to call it that. But it has sort of picked itself up off the floor back to mid-range, right? We started to see some good weakness there in dollar Swiss, bit of dollar yen, even the dollar CAD, but they have sort of all drifted back into the range. Euro looks set for a move higher, but once again, the stronger dollar, just sort of put an end to that. Now, just coming into the what we're looking at today, right, as far as the opportunities go, and we had some Aussie CPI numbers just come out just a few minutes ago. A little bit stronger data, but it's a monthly indicator. It doesn't have a lot of weight, even though it's the weighted CPI. Doesn't count as much as the quarterly number. Now, we do have some German prelim CPI numbers, right? They're probably worth looking at if you're in the European session, because there's not much else. The major trading numbers will be out Thursday, Friday. In amongst that, there are a few bits and pieces where we might get some momentum, and it's the German CPI numbers. Now, just to give you the heads up, if I just scroll up a touch, the way they do it is all the numbers from all the various states across Germany come in throughout the course of the day, right? And then they are, collected, calculated, and then it goes into the overall numbers. So it's a bit of a slow process. So don't sort of hang about too much waiting to see what's happening. This is one of those numbers that the German traders or the German bankers back in the day used to be able to take advantage of it, because they'd get information from various states where they had branches and these sorts of things. But right now, you're probably looking just at the poll, okay? And I don't even think it's going to be that great an opportunity, because we are looking at higher year on year, okay, from the previous numbers, but lower month on month. And that sort of clouds the picture. The market sometimes doesn't know what to do with that, right? It's like, yeah, okay, so it's slower, but higher, right? We want, generally speaking, the month on month to year on year to be the same, either stronger or weaker, then the whole market moves together. So just be aware of that if you are trading. It's just one of those tricky situations you want to try and avoid. At the moment, there's not much uniformity across the markets here, right? The North American equity futures down. We're not seeing that sort of clear risk on, risk off profile on the market. If anything, the metals are down, crude is up, and the treasuries are up, right? That's probably the key to it. So dollar a little bit stronger, and that's messing up the whole flow of the markets at the moment. So to me, it's not a great day to be trading. Maybe you think otherwise. Good luck if you are. All right, guys, have a good one. Cheerio.